And welcome back to Bitcoin Advisors channel, bringing you this cryptocurrency video right here from Westlake Village, California. It's another beautiful day out, and happy Tuesday, almost hump day. What do we want to talk about today? We've got a lot to talk about. We're going to go over some crypto news and some Bitcoin price action, some potential price targets following up from yesterday, and some longer term price targets. And let's jump right into it. First thing is first, Bitcoin on the daily time frame. We did talk about, yes, ultimately our target is going to be down here at 19,000, call it 19,200, 19,300, somewhere in this range. You're not going to, TA is not an exact science. It's more of an art form, right? And why do we talk about this? Well, one, on the daily time frame, we have 4 drives of hidden bearish divergence. And I'm going to mark those off again here. That would be 1. Coming back from this high right here, okay? That's where price is making lower highs, RSI is making higher highs. So we got 1, 2, 3, 4 drives, and that should give us a shot down to the 2618 fib from the prior low to high, and that comes in right there, smack dab at 19,219 on spot price action. So that is lining up very nicely. And we did say, hey, look, there is a threat that Bitcoin, most likely grinds out the top side of this channel with a threatening move up to possibly around 22.2 to 22,500, or to be more exact, that is going to be the 9 exponential, which I do believe we are going to hit that at some point. And we will cross up today, Stokes up from the daily time frame, any kind of a closure above 21,983. And I do believe if we cross the Stokes up, we probably have a better chance of hitting that 22.5 target. Let's check out the 2-day time frame, a more powerful time frame. And yes, just a tick above here will get you a move up to the 9 exponential typically. Again, these moves don't play out overnight, so, sorry if you think that kind of thing happens, but we want to see continued expansion alongside the volatility indicator, the BBWP. So again, it's trend, momentum, and volatility, and we have the same hidden bearish divergence coming right here, 1, 2, 3, 4 on the 2-day time frame, which is a stronger signal. And so, that being said, let's see if that lines up with any of the fib retracement numbers here from using bodies. That is coming in right at the 0.5 at 22,770, and the 382 is coming in at 22,420. So, you could expect a bounce anywhere in that range. Any kind of a daily closure back above the 618 here on the 2-day or daily time frame, coming in about 23,155. I would be looking at this as a failed move. I want to throw up another higher time frame here. Today, we have an important closure today on the 5-day time frame. And what do I see here? So the 5-day Stokes will cross down anywhere below 20,977 today. So, I think call it 20,977. So we are not even close to that point. I don't think that's going to happen today. 5-day closure there. What about on CMEs? CMEs did close yesterday. So we got about another 5 days before this real move is probably initiated to the downside. And why is that? Why did we say, hey, likely to get a little bit of a bounce from here? Well, that was because the dollar yesterday basically hit a new all-time high and is coming back on the weekly time frame, or is it the monthly time frame here? let's see, monthly time frame from a major pivot on the market. I wouldn't even consider that major. This little guy right here, we're breaking above it as we speak. So on the macro time frame, I mean, this was a long consolidation from 2015 to the breakout level right here at that was in May 2022. And we were bullish on the dollar as soon as we started making higher highs and higher lows right here. This was the first higher high, and there was the first higher low on the monthly time frame. So bullish on the dollar, and that means bad for stocks, bad for Bitcoin in general. But why do I say the dollar looks like it could cool off and probably come back down? And as the dollar comes down, Bitcoin probably goes up. And here's why. We have bearish divergence on the, is that hidden bearish divergence? Yes, prices making higher highs, RSI is making lower highs. So let's just mark it off here. I'm going to take off some of these levels here. We got this high right here. This high right here, that's 1, 2, 3. Now, if this confirms as a local high, that would be your fourth drive. And I would suspect a move back to the bottom side of the range somewhere in this area. And if the RSI does come back down below this pivot right here, excuse me, this pivot right here, well, let me drag it down there. So if the RSI comes back below this pivot right here and makes another higher low somewhere in this region, which I think is probably more likely than not. And where do those levels come in? Where do we see higher lows? Typically somewhere around the 618 or even the 786. That would look very good if we put in another higher low for the dollar as we're making higher highs and higher lows on the daily time frame. However, and we did say yesterday, the first move into the bullish control zone usually gets kicked back. That was giving us the bias that, hey, even after that major plunge on Bitcoin on Friday last week, that, hey, probably going to cool off a bit from here and have a, call it a mean reversion bounce back onto Bitcoin here. So dollar cools off. That'd be good for stocks, good for Bitcoin in the short term. What else do I see here? Dow's pretty mixed today. NASDAQ, same, pretty flat. And if this, and why is the market kind of, rejecting off the 200 exponential? I think the 200 simple is right up above there. And that's because everybody's finally figured it out. Even though after the Fed minutes were released last week, you had 3 out of 4 analysts claiming that the Fed was going to pivot and maybe lower rates or not raise rates as fast. 3 out of 4 people were more dovish, and in fact now they're realizing, hey, that was likely just a fake out by the Fed, and more analysts are coming out and saying, hey, the Jackson Hole meeting coming up on Friday, he's going to have a more hawkish tone, and that means raising rates and continuing to suck liquidity out of the market by selling mortgage-backed securities and bonds. Don't fight the Fed. That is the great old saying. Do not fight the Fed. And I would suspect here for some more downside in the stock market to come. And, again, I'll make a pretty bold statement here and say I don't think the U.S. stock market is going to make new all-time highs for another couple of years. And that's based off of this 6-month bearish engulfing candle. It's only happened 2 other times in history. Once was in 1973. 1973 would have been right there, bearish engulfing. 6-month candle, high time frame, very, very powerful. And then the one prior to that, was in 1929, the Great Depression, 20-year bear market. And this was about a 7-year bear market as, this one right here. From 1973, we didn't re-eclipse the highs until 1980, and really didn't start to rally again until 1982 or 1983. So that was called a 10-year bear market. And what do we have right now is a target for stocks to come down, at least down to those COVID lows on the S&P, about 2,200, somewhere between 24 and 2,200. As we know, the growth wasn't real. All the money they pumped into the market gave everybody all this free stimulus money, created, artificial money out of thin air, right? They just added zeros to their bank account. And what did they do? They bought mortgage-backed securities and bonds, told everybody they're going to bail out people for COVID. People barely got any money. I know some businesses ran away like bandits. I sure didn't get any money. Stock market outlook, not so good. And if stocks are going down, well, Bitcoin probably is going to suffer. And I'm just going to throw up one other thing here on the weekly time frame because I found this really interesting this morning. Another guy with a similar target down to about 10,000 bucks on Bitcoin. And I'll just make this a bit on the naked side. Let's make it, that is looking good for some more downside. But I'm going to take all the moving averages off and just clear this up and just talk about basically Charles Dow, the guy who invented the Dow Jones, or they named the Dow Jones after him. He has a theory that markets tend to have 100% retracements, 50% retracements, and 66% retracements, which is the 618 fib basically. And so what am I doing here? I'm going to measure this out from the high to the low. So as you can see here, from the COVID lows, where is the COVID lows? Is that the COVID low? March of 2020. March of 2020. Maybe I should have done this before I went on TV, huh? So from the COVID lows to the high, do we have a 50% retracement from the high to the low here? 56%, close enough is close enough, almost to the 618 fib. Okay, then we have a 100% retracement to the upside, right? Bitcoin goes from 28,000 to 69,000 roughly. And now from the COVID lows, we are almost coming, well, we had, I believe, a 50% retracement. Let's see. If we come down here, that's 70%, excuse me. 70%, which is right at the 786 Fibonacci right now. I forgot how he lined this all up, but it's very, very interesting to see how these Fibonacci levels work here, and they work almost in concert with each other. Okay, here's the other thing the guy on Market Makers was talking about. I don't trade based off of his style, but I just find other guys entertaining online. And here's what it is. He's talking about an ABC correction. Let's see if I can draw this out here. A, B, C, and then wave 1, 2, what is it, 3, 4, and he had a target down here somewhere around 10,000 bucks. Yeah. So that's 100% retracement. And here's the interesting part. Okay, if you measure, or if you look at these bars right here, this downside correction was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 downward bars, 11 bearish candles, 11 closes to the downside, and a 53% retracement. And then you have 1, 2, 3, 4, 5, 6, 7, 8, 9. So 11 to the downside, 9 to the upside. And what do you know? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 to the downside and 9 to the upside. 1, 2, 3, 4, 5, 6, 7, 8, 9. What do you know? And so now what would we expect? 11 more to the downside. September is historically one of the worst months in the history for Bitcoin. That doesn't mean a whole lot to me, but what does matter to me is all these economic factors, which are certainly on the bearish side. That is inflation, the war, raising rates, and a stock market that is just putting in a bear market rally and getting rejected at the 618 fib right here. And it does not look pretty for stocks along the way. The only thing that would save the day, in my opinion, if we put in some kind of a higher low right here, and that would be on the daily time frame, on the weekly time frame. Yes, that would be a trend reversal. We got the first higher high and then a higher low. But Michael Burry, the guy who sold all of his stock, the guy from the movie The Big Short in 2008, the guy made tons of money. He's a hedge fund now, and he had to declare all of his holdings just recently in the most recent hedge fund release of all their economic data. And I believe he brought something up here. I believe it's the NASDAQ. So maybe I shouldn't reference the S&P 500, but I'm going to do it anyways because in the 2002 dot-com bubble crash, I believe what he said was there was like 20% rallies, bear market rallies. And here would be your trend reversal. I mean, really, first lower low, lower high. But let's count how many bear market rallies were there. That doesn't count. I'm looking for 20% rallies. There we go. 15%. Close enough is close enough. This one was 8%. Okay. From this low to this high here, 20%, 26%. So how many 20% bear market rallies were there? And if you start the correction over here, which again, we did make a double top here. It looks like in 2001, the bubble began to burst. I got to go find the article for you guys, but I think that was only three 20% bear market rallies, or maybe it was only 2. And maybe I should be looking at the NASDAQ. So NDQ. What is this symbol? I look at NASDAQ futures, not NASDAQ. I don't think it's the NASDAQ 100. I look at the NASDAQ futures. So which one are we looking at? Anyways, if this fails, guys, I'll bring it back with another video. But there was a lot of bear market rallies, and that is, in fact, what I think this is. Just my opinion. It's not financial advice. I'm not a financial advisor, but when you get rejected at the 618 fib, that is where your classic bull trap happens. And we came right up into it to the T right here at the 618. And some would not even call this a lower high. It's not a clear stop and reverse point. This was the stop and reverse point. And now we're getting a clear rejection as well. One thing I did want to note is it does look like there is a bit of a gap here. So could we get a gap fill in the short term and watch Bitcoin rally? And here's something to watch out for as well. Bitcoin on the 5-day time frame. If we start to see volatility tick up. Right now it's very low. If volatility ticks up, I expect Bitcoin to go in the direction of the trend. And on the 5-day, we'll cross down anywhere below 21,000 bucks. Now it says $21,000 today. And that. Lastly, I'm going to leave you with some short-term targets, something I was looking at here on the 1-hour time frame. I'm getting so many different reads. What's going on here? Oh, that's the 4-hour. So 1 hour looks like it is getting rejected as Stokes are crossing down, and we do have, and this will be closing here in the next 2 minutes and 46 seconds. And I would want to see a candle body closure below here to confirm this as a high, and preferably below here. And then we will have several drives of that hidden bearish divergence, or just regular bearish divergence, where, price is making lower highs and RSI is making higher highs. Coming all the way back from this point right here, you'd have 1, or you could even call this 1, 2, 3, 4, 5 drives, and that would give you a shot to the bottom side of the range. This has yet to close, so volatility is continuing to increase as the momentum is crossing to the downside, and it will cross up here above 21,526. So I do think on the other side of this, we did have a little bullish divergence coming back from this point right here. Hidden bullish divergence, price is making lower lows and the RSI is making higher lows. And that is, again, in comparison to this point right here. You've got 1, 2, 3, 4, 5. And that's why I am targeting a move up to this area right here. And it's going to line up very nicely with the 200 exponential. We're also almost getting the silver cross. If that does fail and we reject here, I would expect a move back to the bottom side of the range at a minimum. But if this does cross up in the next couple of hours, I would expect this target to get hit, which is based off of that 4-drive philosophy that we've been talking about. And I'm going to expect a target on the shorter term time frame to line up right there at about 22,105. And let's see if that lines up with anything else here. And yeah, that's coming in right up against the top side of this range here. And this trend line, right? So typically price does like to grind up against this, kind of give a retest, and then reject from there. And then I think we could see, mediate that, any kind of a 4-hour closure below 20,716. Let's see if that lines up with anything else. That very likely does give us the next momentous move to the downside. And that's it for today, guys. I think I'm going to wrap it up with that. Hope you all have a blessed and highly favored day. Do we want to check on Ethereum? Ethereum kind of going to do whatever Bitcoin does. Do we have any, bullish divergence here? And we did just close above here, above this wick. So, could we expect a move up to about 1675 or even 17.7? Let's see, based on that 4-drive philosophy, I'm counting 1, 2, 3 lows right there. And those are not higher lows than that point. From this point right here, we'd only have 1, 2, 3 drives. 3 drives can give you a shot to the top side of the range, which is what we got so far. And even a shot up to the green 55, which if we do a Fibonacci retracement from the low to the high here, first target is the purple 200. The second target is, yeah, so I think more likely than not, we probably get a shot up to the purple 200 and probably rejects off of the first pass there. We got Stokes up, and we do not have any bearish divergence forming yet, as long as we are, the RSI is below here. Is it below? No, it's slightly above. So that would be possibly your first 2 drives. So what we'd want to see before the next downside move is something like this. Come down, test again, one more high, and then a confirmed local high and back into the bearish control zone. That would look good for the next downside move in Ethereum. All right, I'm going to wrap it up. Enough out of me today, guys. Hope you have a blessed and highly favored day. And feel free to post a comment below if there's any coins you want me to cover. Take care.